The German economy is struggling, and it's the only major European economy to experience an economic contraction during 2023, according to forecasts by the European Commission. On top of that, more than 8,000 businesses in Germany have gone bankrupt this year, and more companies will go bankrupt. Even though this situation is not unique to Germany, but due to a lack of German language and not knowing their rights, many foreigners coming to Germany fall into the debt trap, especially students. In this video, I will tell you why most expats in Germany fall into debt, what you can do about it, and how you can get help for free if you are struggling to keep your finances in check. Hey friends, if you're new here, my name is Essen, and on this channel I make videos on business and personal finance in German. And as a result, I get a lot of questions ranging from the best free bank account in Germany to best free credit cards in Germany. But due to a sharp rise in German bankruptcies, I have been getting a lot of messages from expats in financial trouble who have fallen in the debt trap. It's particularly disheartening because most of these individuals are young professionals or students. Young professionals or students who have become accustomed to a high standard of living despite having limited income. And you know what? It's not entirely their fault. You see, the buy now pay later culture has become so prevalent that it's incredibly easy to fall into this trap. Want the latest iPhone? No problem. You can get it for just €60 a month. Craving a vacation back home but lacking the funds? No worries, personal loans are handed out like candy. However, what many fail to realize, often too late, is that these seemingly small costs can add up over time. That €60 per month for the phone, €100 for the personal loan repayment, and many other unnecessary purchases can make a hefty amount each month. Not to mention that pesky credit card debt. Right now, interest rates on credit card is near 25% per annum, meaning that you have to pay €25 in interest each year if you pay a €100 loan in installments. This is just the tip of the iceberg. The worst case is people jumping to buy real estate just because they found what they thought was a good deal. Just the other day, I received a message from one of my followers. Let's call him John. He asked me about something really tough. How to declare personal bankruptcy. You see, John got caught up in a crypto scam. He gave some money to a person who claimed to be a crypto investor. In just a few days, that person promised John a profit of 100% from his investments. You can guess what happened next. The crypto investor convinced John to give him even more money. So John took out a big loan in the tens of thousands of euros and gave it to him. But here's the sad part. The investor disappeared with all of John's money, leaving him in a terrible situation. Since John couldn't repay the loan, he had to declare personal bankruptcy. I'll talk more about what that means later on in this video. But before you start panicking, I know your case might be different. So before you start panicking, you should look into your credit score or Schufa score. I have a detailed video on that, but what's important is that Schufa Holding AG is a company that collects information about you as a consumer from various sources such as utility suppliers, banks, and internet providers. They keep track of your bills and fines over time and use this data along with their own algorithm to create a credit score for all residents in Germany. When people talk about Schufa, referring to the record that this company holds about their credit worthiness in Germany. This company rates your ability to pay bills and creates a record called Schufa Auskunft that will follow you in your everyday life as a consumer in Germany. Your Schufa record is created as soon as you register an address in Germany. Having a 75% Schufa score is very good and 95% Schufa score is considered good. However, the system is designed to prevent you from becoming overwhelmed by debt over time. So even if you pay all of your debts, your score will still drop a few points for unknown reasons. So it's totally okay to have a score as low as 95%. The important thing to remember is that if you ever find yourself struggling with debt and feeling overwhelmed, you don't have to go through it alone. Good news is that there are about 1,500 debt advice centers or Schuldenberater in Germany that are here to help you out. The best part, they offer their advice for free. These centers are usually run by non-profit organizations like Caritas, Diakonie, or the German Red Cross. And guess what? It's not just them. Consumer advice centers and local authorities also have your back when it comes to debt advice. Now, I know what you're thinking. Where do I find these debt advice centers? Well, it's as easy as checking out their websites. Providers like Caritas, Diakonie, and the German Red Cross all have the addresses and contact details that you need. Or you can also check out this website from the German government, linked below the like button. These debt counselors are total pros. They come from various backgrounds ranging from social work to banking to law. So you know you're getting top-notch advice. And when things get legally tricky, these consultants can even team up with lawyers to make sure that you're covered. Now, if you're dealing with more complex cases like self-employment debt or disputed claims, you might want to consider reaching out directly to a specialized lawyer. They can offer tailored assistance, but keep in mind that their services will be a bit pricey. So when should you reach out for advice? Well, the sooner the better. Let me break it down for you. If you find yourself constantly struggling to make ends meet with not enough money left at the end of the month, it's a clear sign that it's time to seek help. Now I get it. It's easy to let shame get in the way, and many people try to handle their debt situation all by themselves for way too long. They start exploring options like loan from providers who don't even bother checking creditworthiness with Shufa. But here's the problem. These types of loans come with sky-high interest rates, only making the debt mountain grow taller. Some people resort to borrowing money from friends and family over and over again. Sure, it can help if that cash injection is actually used to tackle the debt head-on, but if personal loans aren't used to reduce the debt, it can strain friendships and family ties real quick. Plus, when you're in trouble with your loved ones, it's harder to reach out for help due to embarrassment, and you end up isolating yourself even more. Having a solid support system from friends and family can be a game changer on your journey out of the debt trap. To make things easier for those seeking advice, organizations like AWO and Caritas offer anonymous online advice. It's a great option if you want to dip your toes in. But let's be real, if you need long-term support, a personal conversation is the way to go. Don't worry though, everything you share during those conversations is treated with the utmost confidentiality. Now when it comes to making an appointment, I suggest you give them a call or simply send them an email. But remember, non-profit counseling centers often have waiting lists that can stretch for months. However, in urgent cases where you are at risk of losing your apartment or other severe cases, they usually find a way to help you out as soon as possible. If you're getting value from this video, please hit the like button and consider subscribing. Let's talk about how this debt counseling thing actually works. In your meeting with a debt counselor for the first appointment, you'll dig deep into the nitty-gritty of your financial situation. They want to understand the scope of the problem and how you ended up in the debt in the first place. So they'll ask you about your income, your expenses, and the total amount of debt on your plate. They'll even explore areas where you can specially save some money. Oh, and don't forget about the social benefits you might be missing out on. Debt counselors make sure that you're aware of all of the options that are available to you. If needed, the counselor can also help you take immediate action. They might assist you in converting your account into a seizure protection account or help you dispute those pesky reminder notices. Now let's move to step 2. The debt advisor will go through all of your documents and gather all of the claims from your creditors. Together, you and the expert will examine if those claims are valid or if any creditors have added ridiculously high reminder fees. If you want, the debt advisor can even handle all of the correspondence and negotiate with your creditors. For example, they can work on your behalf on arranging payment deferrals. And you know what's cool? Once the mail starts going directly to the debt counseling center instead of your own mailbox, it can give you some much needed relief from those constant reminders. Now here's the deal. While lawyers usually focus on the financial and legal aspects, non-profit advice centers take a holistic approach. They want to provide you with a comprehensive social support. In addition to tackling your current debts, they show you how you can keep track of your finances using a budget book. Plus, they'll point out areas in your everyday life where you can make some changes to save some money. These experts are well connected too. They have networks with various social institutions, and if necessary, they can help you set up appointments with family or addiction counseling centers, the job center, or the housing office. The goal here is to address the root causes of your debt problems and prevent any future debt from piling up. See, debt counseling is not just about the numbers. It's about taking care of you as a person. Alright, let's talk about the different ways you can get out of insolvency. When you find yourself in a tough spot with debt piling up, there are two options to consider. Option number 1, debt settlement. This is the best route if you want to avoid going to the court. Here's how it works. You team up with a debt advisor, lawyer, or a tax advisor to create a debt settlement plan. Together, you figure out which claims you can pay and in what time frame. With this plan in place, you can offer your creditors a lump sum payment plan or fixed installments in exchange for forgiving a portion of your debt. Now here's the catch. All of your creditors must agree to this plan. Even if one creditor doesn't come to the table, the whole deal falls through. But you'll put the agreement in writing, and once you've implemented the plan, you'll be debt free. Option number 2, consumer bankruptcy. When there's no agreement between you and your creditors, the only way out is through consumer bankruptcy. This option allows you to get rid of your debt even if you can't repay them in full. Here's how it goes. You'll need to pay a portion of your income that can be legally attached to a trustee for 3 years. The 3-year rule applies to anyone who has applied for personal bankruptcy after October 1st of 2020. Before that, the old rule of 6 years still applies to bankruptcy. Oh, and during the process, you'll need to work or actively search for a job if you do not have one. Plus, it's important not to take any new debt along the way. Debt advisors are there to help you weigh the pros and cons of the insolvency process. They'll also assist you in filing out any of the necessary documents if you decide to file personal bankruptcy. And if you choose to take this route, they can stick by your side throughout the entire process, providing the support that you need. Remember, no matter which option you choose, there are ways to overcome insolvency and pave the way for a debt-free future. You don't have to face it alone. Debt advisors are here to guide you every step of the way. Are there dubious debt advisors? Yep, unfortunately they exist. Here's the deal in Germany. The term debt advisor isn't legally protected, which means that there are plenty of commercial providers out there who specifically target debtors and offer a so-called debt help or financial restructuring. But here's the catch. These providers usually bring more problems to the table than solution because they're in it for the money. For most people struggling with overwhelming debt, the best bet is to turn to recognized debt counseling centers like Caritas or Diakoni. These centers have a good reputation for genuinely helping people. But hey, if you're thinking about getting advice from someone else, please be careful. First, closely look at the consulting contract. If the provider says they won't give legal advice, that's a warning sign. Debt advisors without proper authorization can't give helpful debt advice. They might say they work with lawyers, but here's the thing, you'll end up paying for both the service provider and the lawyer. That's not good. And while we're talking about it, please don't sign any contracts that they give you, like insurance or new loans. Just say no. Another important thing to think about is whether the advisor can give you a certificate according to section 305 of the Insolvency Code. Lawyers and non-profit centers can do this. This certificate is really important because it shows you that you have tried to agree with your creditors. It's a key requirement for starting the insolvency process. Now, besides all of the technical stuff, choosing the right debt advisor comes down to your instinct. You should feel comfortable enough to be honest about your money situation and work together to find a solution. A great starting point would be to increase your savings. In this video, I share some actionable tips that you can take to increase your income in German. So thanks for watching, bleib gesund, and I'll see you in this video.